Hey everybody, so I wanted to do a quick stock market overview. So starting with the SPY, we're going to go on the 1 day, and then we're just going to look at the price action today. So you can see right here we gapped up very hard. We went all the way up to 433, and we ended all the way down here at 420. Now notice that we actually went under 420 intraday, but we closed above. So now I'm going to flip to the 1 month. I'm just going to see what could potentially happen here. So with this move up in the morning, you can see that, let's see, you can see that we filled this gap right here. So you see that? That gap got filled. Now I think what could happen is that we're going to go and fill this gap right here. So if you see right here, there's this gap right there. And this gap is right around 418. So I think it's very possible that this gap gets filled at 418. And what we basically saw was one gap up that filled this gap right here. And then now we might just get one gap down. So we could just literally fill two gaps in the matter of 2 days, which is pretty crazy. So where do I think we could go if we go down to 418? Well, let's zoom out a little bit. I think we could possibly go all the way back to 410. We could fill this gap right here at around 416. So look for that gap fill at 416 if we go into 418. And then we could potentially double bottom at 410. And where could we go if we go under 410? So if we go under 410 and we close under 410, that's going to mean we make a lower low, which is pretty bad. So in my opinion, a lower low will look like 402, 403 on S&P 500. So watch out for that. I think the possibility that it happens next week is very, very high, given the FOMC meetings and quadruple witching. And one thing I want to note is that a lot of ETFs give out dividends at the end of the quarter year. So we're going to see a lot of that happen. I don't know how that's going to affect the market. We might fall, or people might notice, oh hey, the indices are so cheap. I'm going to buy in and I'm going to get my dividend and I'm just going to hold. So that's essentially what I'm planning on doing. I'm planning on buying VT, which is the Vanguard Total, and it's built very much like the S&P 500. So it's basically following SPY almost. So it's very similar to SPY. It's just significantly cheaper. So if I were to buy the S&P 500, then it'll cost me 420, but VT is actually pretty cheap. It only costs about 100 and no, it's a little cheaper than that. Let's look it up. It's only 94.66, and the dividend yield is actually about 2%. So it actually plays out better than the S&P 500. So you can see basically following the same move. So if you're buying VT, I think it could fall to maybe 89 potentially at the worst. So 89 would be like the 403 for SPY. And then in the shorter term, maybe like 93. So let's go to Google. So Google, you can see that we actually snapped back pretty hard. So right here, I thought we were actually going to fall more because you could see that we drew that shooting star candle, but we just had this massive gap up. But this massive gap up hit the top of the trend channel and then we rejected, so that's not good. So I think it's possible that we could actually fall $100 here on Google and do a triple bottom here, right around 2,493. So that's very possible in my opinion. So we'll watch out for that. And with NASDAQ, I mean, NASDAQ doesn't look too good. It couldn't even get the power to hit the top of this trend line. So, I mean, maybe we could double bottom here at 318. If it falls under, I think we could see a pretty quick trip to maybe the 300 area, 298. So I think that's very possible if this area breaks down at 317. So watch out for that. If we fall under that, then yeah, it'll look really ugly, 271. Now this is gold. I'm gonna have to zoom out for you guys. So you can see that gold kind of topped out here, and there's a serious sell-off when that did happen. So we'll see if gold gets bullish again, but for me, I want to see gold break under 183.53, and I want to see a massive gap down all the way down here to 175 to make myself feel a little bit better about the equity markets. At this point, I think a lot of people, if we fall under that, to me, that would mean that people are taking profits on gold and they're probably moving to something else. So, is that something else just cash on the sidelines, or is that something else buying stocks? Who knows? But I'm looking for gold to break down this area 183.66. So XLF, the financials. I mean, it's just kind of wobbling back and forth around here. You can see that the 20-day crossed under the 200-day, and we're below the trend channel. So nothing much happening here. Support will probably be around 36, but you can see we closed under the 36.80 support. So that'll be a future resistance. Now XLE, I mean, we could see XLE, the energy sector, has just been outperforming. And let me zoom out for you. You can see that we kind of topped out here. The actual base of the candle is right around 76.92, which you could see was a prior resistance back here in 2018. Let me zoom out even further. So you could see in 2016, this was actually a double top. So 2018, 2016, we had this double top right around this area. You could see the base of this candle closed right at this area as well. So in the shorter term, we have this trend. It started in December, and you can kind of see how the XLE hasn't fallen under this trend. It's come really close many times, but you can see it just bounces perfectly off it. So the first sign that I want to see if I'm going to be shorting XLE or even being more bullish on this market is I want to see XLE fall and then eventually break underneath this trend line. To me, that would be pretty bullish. And bullish as in the rest of the market and me shorting XLE. Now, Tesla, you can see that we've just been following this trend channel this whole time. We rejected the 200-day moving average. So it's very possible that Tesla could just come right down here to 772. If it falls below that, I think probably retesting the 700 would be likely. Now with Apple, now Apple is one that I'm watching very, very, very closely. Now pay attention right here. The 200-day moving average is right there, 153.61. Are we going to bounce off the 200-day moving average and everything's going to be okay again? Or are we actually going to fall underneath the 200-day moving average? So what's actually below the 200? Well, we got support here at 150. You can see it's the base of this candle, which basically had this massive rally right there. So you can see it will basically undo this entire rally if we fall all the way down to 150. So I think that's a very likely area of support. You can see it was previous resistance here, here, here. So my opinion, good area of support. If it falls underneath that, I think what could probably be even a better area of support is right here around this 145 area. So you can see Apple kind of went through this pretty big pullback here. This was back in 2021. And then you can see once it broke out of this area, that's when it started rallying again. And once it broke underneath this area, that's when it really sold off. So I think this 145 area is a significant support if we break that 150 area. So in my opinion, I don't think we're just going to bounce right off the 200-day moving average. I think this sell-off probably has enough legs to take us underneath, and I'm sure a lot of people are going to get stopped out if Apple goes under the 200-day moving average. And I think that we could get that knee-jerk reaction before we get a bounce to the upside. So now, one thing I want to point out on the VIX, this is very interesting to me. So we have this trend. It goes all the way back to the beginning of February. So it's about a month-long trend. You can see we've been bouncing, 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 bouncing. As of lately, on the 10th, we cut underneath this trend. And now we're actually below the trend. But look where we closed today. We closed ever so slightly above the 20-day moving average. So what does this mean? I mean, I really don't know what this means. Are we going to gap up and get back in this trend line? Or are we just going to gap up and then reject and VIX is going to tank? Well, I don't know, but there are a lot of events next week, like the Fed. And you can see here on March 15th and 16th, we have the summary of economic projections. So we're going to get FOMC 2 days next week on the 15th and the 16th. So I hope this was helpful to you guys, and good luck next week. Definitely look for buying opportunities in the ETFs, and hopefully you could get that dividend also, and we rally.